Greetings, everybody. This is Jeff Scott. It is actually on the 4th still, approximately 9:15 p.m. Saturday night, and this is my top-down review. I actually have a 4:30 wake-up tomorrow, heading to Vegas to speak at a meeting, watch the Super Bowl, etc., and cheer on my Falcons. Last time the Falcons were in a Super Bowl, it was not their best showing. The only time they've been in the Super Bowl. So we're hoping for a better outcome. Anyways, talking about better outcome, hope for a good outcome this week in the market as well. And I entitled today A New Leg Up. We'll talk about why I think that's the case. If you think about, for those who've watched me or done these before, how much I love pullbacks to support and then momentum, it's kind of a pullback smorgasbord, orgy fest of pullbacks with when you take a look at the S&P, the IWN, and they've all been pulled back nicely with a move up off of support on Friday, and we'll take a look at these. Disclaimer, this is for education purposes only. Anything recommends in the spirit of education, not investment advice. I am a doctor, not a broker. I am independent. That means I am not affiliated with any software vendor or trading company. Tools demonstrate those that I use in my daily trading. I have paid for all the tools I demonstrate. Trading involves risks. You and you alone are solely responsible for any investment decisions you make. Nothing that I'd say here should be considered investment advice. This is all about education and learning how I use tools. And if you elect to trade in options, I also want to emphasize that many people consider, including the regulatory bodies, options to be very risky. Very briefly, I've tried to marry two schools of trading, one being Cancelim, as introduced by O'Neill, improved by Morales and Catcher, taken to the computer by Ian Woodward, with further enhancements by Ron Brown, with the words, wisdom, and knowledge of John Person. John, a trader since the 80s, expert in technical analysis. He has his own indicators and packages, great mentor, educator, friend, author. These are a couple of his great books. Van Tharp, Position Size and Money Management, is a nice thing to keep no matter whose training you follow. And then here's my buddy George Lee. I'll start to let you know now. Apparently, around the weekend of March 24th, there will be an Orange County meeting in Santa Ana, and I will be there as with George. I know the meeting is scheduled that weekend for Saturday, Sunday, and then Monday at least a half day trading until the market closes. So looking forward to that. That may be the only live event that I do this year unless there's another Orange County, since it's tough to put on my own meetings with me back to work. I have a lot of and by the way, for those who wonder why I went back to work, retiring at 55 sounds like a great idea. And I've been very fortunate market-wise and business-wise. But then you wake up in the morning, you're used to going to work every day and managing people, and sometimes many people, and you're being managed by your spouse, and the only person you manage now is your dog, and your dog doesn't care about performance reports and their annual review. And next thing you know, you actually miss working, and I went back to work and started another business. So I'm a little bit crazy, but I actually enjoy both parts of my life, both the trading, but I do enjoy working. Don't tell that to my wife. I think she'd rather me not have gone back to work. I have a lot of programs. I don't need a lot. I need TradeStation or Thinkorswim. I find Genesis to be very useful to me, and it's got some great charting and scanning platforms. I do recognize that it's costly, and most people who follow me probably don't have it. Hgsi to me is the best after hours and delayed intra-hours analytic tool in the market, and it's a great supplement to those that have MarketSmith or other things that they use. EdgeRater automates for me some of the things that used to take hours. And then I am a fan of seasonality, and these are some of the websites that I use. Here is highgrowthstock.com. I pointed out not because I get commissions or bonuses or any credit if you join, but for two things. There's a free 30-day trial. And the second reason is click down on investing strategies, look for two names. We look for all of them, but specifically Ron Brown talks a lot about both trading concepts that are different than mine, a lot of volume price analysis work, and how to use HGSI. And then you'll see my name, and both of us have probably hundreds of videos that we've put together over the years to teach people how to use the program. Well, here we are again, and as soon as I think we're rolling over, and boy, oh boy, on Monday midday, I thought we were there, that this was it. And I think I titled last week, breakout or fake out, and it seemed like a fake out, didn't it, early in the week? But then, despite Amazon blowing up, if you call it 4% drop blowing up on Friday, the markets really like the employment numbers. I guess it shows strengthening economy, but not too strong. And the markets took off. So it almost feels like we're about to go up again. And because of that, as you may remember last week, I said I took some protection over the weekend. That was helpful, but I was still tilted much to the long, And I always put on a little protection on the weekend because you never know what's going to happen. But I don't have that much protection on right now, so I'm thinking this market's going higher. But that only is good until the market opens, and so that means buy stocks, calls, sell puts, out of the money. And some of my protection, frankly, is selling calls way out of the money and selling puts and bull put spreads and putting in some premium, and that buffets it if this market actually comes down some. At different times in the market, I have different approaches. So here's kind of a review of last week. This is my sector scan from John Person's package in TradeStation. Green is good, red is bad. That's pretty darn green. And I point out a couple of things. Every financial stock, until you get to the two broker dealers, and there was a rate decrease by Schwab that impacted some, are positive, even the credit cards. And if you look at the moves in regional banks, these are not 10-cent moves. These are 4%, 3%, high twos. Same thing in the big banks. Also pretty big moves, several with 2 and 3% moves. Credit cards up to 4% plus in Visa. Other thing to see strength in, although oil doesn't seem to me to be very strong right now, energy stocks, really, this is XLE, XOP, and OIH, and when you look at a large number of them, only Phillips 66 was weak. What does that say about energy? And then I'll also point out semiconductors, wherever they may be. Look at the green in technology and several of the semiconductors. So that's frankly where the strength of the market is, but overall, you can look at healthcare and see lots of strength here, although mixed compared to financials. Very strong market on Friday. If you look at the major markets, a week ago I talked about how I thought the 50-day moving average in yellow might be short-term targets, especially on the YMs in the upper right-hand corner, and the TFs had already broken through. And look how we have bounced, got close and bounced here, have bounced through the 50 here, and we held at the 17 on both the E-minis and NASDAQs. E-mini, NQs, YMs, and TFs on the daily all look like they're about to take a leg up, several with brand new PPS buy signals, the others had old ones. The VIX continues to languish around, and it failed again early in the week at that 50, and the dollar continues to move lower, failing at the 17. That's the daily. You look at the weekly. Again, as I said last week, I tried painting a little bit of a bearish picture because I thought things were due for a pullback. I thought it'd be more than one day, but as I pointed out, it's hard to argue when most of the major indexes are at or near new highs or near closing highs. The VIX is in the toilet and the Dow came off strength. And although a strong dollar long-term is probably a good thing, I like to see us get there gradually and not quickly. And because I know that if we go up too fast on the dollar, then we start to get to areas where perhaps concern about the market being, the dollar hurting the market. And then this is my Genesis views. Again, the top 5 are daily, then weekly, then monthly. First column are E-minis, NASDAQ, Russell, NYSE, and the Dow futures. Just look at the monthlies, they're all strong. The weeklies are all now in a buy, and the dailies are all in a buy. Market is strong, stronger than it was a week ago. And again, my expectation is this market goes higher. Partly what's helping the market is stabilization of rates. I think everybody got what they wanted. The banks got what they wanted to see without it destroying the rest of the market. That the regulatory relaxation, the Dodd-Frank relaxation, certainly stimulating the banks. Yet, and even though interest rates are up off the lows, they're not moving so fast that they're scaring the market. Another thing that's important, whether you look at the big stocks on the right or the small stocks on the left, the AD lines are out to new highs. The AD lines here are in white, and I believe the spiders are in yellow. With the AD lines at all-time highs, hard to believe that this market is ready to roll over just yet. If we look to make sure we're not too bullish, breadth remains strong, but not overbought with a T. Let me add my T there. All right, go back to current slide. And you can see the number of stocks above the 200-day SMA are in the upper part of the range, but not quite up to danger levels. For a while, this line had been resistance, and so we just peaked above it, something to watch. But on a shorter-term basis, stocks above the 40-day, we actually came down a little bit this week. So we've got good breadth, but not exuberance. 3-month new high, new low. This one, when it reverses, the market usually pulls down very quickly. And this line here, which is very high, is sort of whenever we hit this, there's been reversals. We're nowhere close, although we are certainly in the upper part. So I'll be watching that, looking for a clue that the market's gone too far too fast. This is a commitment of traders report. It's something that I used to talk about a lot. I got into some heated debates online about interpretation. I am interpreting this as I learned from John Person. I do recognize that there are other interpretations. I'm looking specifically at the price and then the COT here. The COT report looks at the blue, which are the professional speculators, hedge funds, banks. The yellow, which are the non-professional speculators, us. And the red are the professionals who be hedgers. A hedger might be if I make a product and I sell it in Europe and the euro goes down in value, then my revenue is going to drop in dollar terms. So I might create a financial hedge to protect me for that drop in the euro, perhaps buying a put in the euro. If I'm an airline and gasoline is one of my biggest expenses, and I am concerned that gasoline is going higher, well, I could buy a refiner like Delta did, which still cracks me up, or I could buy a call on oil and hedge my risk. Turns out in the old days when oil was expensive, there was a lot of money spent on hedges. So I don't pay attention to the red line because those folks are doing it for a primary business reason. They're not necessarily right, but they're doing it to protect their business. Now, one thing that I always find interesting is that if you go back, and in fact, let's just go look at it in a real chart. Go to 2009. So let me go back a little bit. So here's the market. Let's see if I can capture just that piece of the market. So here's the market falling in 2007 and 8. And you notice that the yellow were long the entire way. So us amateurs, the individuals, the small speculators, us, were long the entire time the market was dropping, while the professionals were short. And then sometime before the end of 2008, the professionals started smelling a bottom, and they started to go long. And then the crazy thing is, when you went from March of 2009, here's John's buy signal coming in on a weekly chart. When you went from March of 2009, all of a sudden, the small guys, us, went short. We finally got scared out of the market, and the big guys came back in and took our position. So we're contrarian indicators. So if I go back to today, what I wanted to show you, and that's how I interpret this, is that the hedge funds have now gone net positive. Now, they're not a lot net positive, and the stock market's gone a lot higher, and there's a lot less buying pressure by the professionals. But the fact that professionals have gone positive, I think, is a bullish thing as well. Although their timing isn't great, ultimately they typically are the smart money for a reason. They're smart. Now the McClellan, let me call out the good news. We go to new highs. We finally broke above zero on the oscillator. The summation index still is lagging. I guess if it turns up from here, we can say higher highs, higher lows. But right now, I'll be happy to say that on both the daily and the weekly, the summation index has finally turned positive. Still a little bit concerned that the McClellan seems to be lagging. Other ways of looking at breadth, the buckets are, this is Edge Rater. I just put the list of the S&P 1500 in, and it tells me on the right how many of those stocks are above the midline of their Bollinger Bands. The more bullish. Above 50 is above neutral. Above 80 starts to get a little bit too extended. We are at a nice bullish number at 62%. And then over here, I look at how many stocks are at above the upper band or below the lower band. We got about 10% above the upper band. That's not a dangerous number by any means. Clearly improved over where it's been, but not too far to be concerning. There have been no Hindis on either the Russell or the NYSE over the last several weeks. The Hindi is a sign of market entropy, confusion. It signals a top, and it's automated in Edge Rater, and I run it on a daily basis because in 2007 and 2008, it really gave a very early and persistent warning sign that all was not well in the marketplace. There has not been a major correction in 50 years that has not been triggered by Hindenburg. Market tone improved. You notice this line of blues here? Those are called kahunas. So across most, and I think it was the NASDAQ 100 and the NASDAQ are the two that didn't fire on Friday, probably a lot to do with Amazon. These are a big momentum move. And when I see a line of kahunas happen, unless it's at the end of a big run-up, it typically stimulates another move to the upside. If you go over to the third column, you see the Woody indicator, and not hard to figure out. Green is good, red is bad, yellow is neutral. And you can go back to early in the year. We had a round of kahunas, reversed a tough market, and we went into a prolonged period that was bullish. Back here, after a rough time in the market, a line of kahunas, and ultimately a day or two later, we went to a big up move. So we're doing it again, and we'll see whether or not this can take us higher. Sector strength improved. There's no reds down here. And it's only this third Woody indicator column that matters. Staples and, is it staples? I think no, materials and health are green. The rest are yellow, but absence of red is actually sector strength improvement. Canaries in the coal mine are some major leaders that we look at on a weekly basis. We made our own index with these stocks, looking for signs of a market breaking. Last week, we had some shots across the bow, and it looked as if this market was going to roll over. And, you know, it's funny, if you look at Amazon, horrible day on Friday, but they're higher than they were a week ago, or 2 weeks ago, rather. So, you know, it hasn't rolled over yet. Kind of looks toppy to me, but we'll still wait and see if that gives us an indication of some weakness, at least in the large NASDAQ stocks. Know your news and earnings dates. Last week was busy with the employment numbers and the Fed meeting. There's always going to be energy reports, mortgage reports, jobless claims, import exports, the Baker Hughes rig count, Fed balance sheet, lots of different things, as well as various Fed speakers speaking. This here is taken out of Bloomberg's free site on the web, and here's the link. You can look at it by day. You can click on these and get more information. Earnings. When I look at last week was a big week. This is a pretty big week too. Monday you've got some energy stocks, at least energy services. Tuesday, one of the companies that bought one of my companies, Cardinal Health, Michael Kors, GM, Gilead, Panera, Take-Two, Twillo, Disney. Wednesday, Humana, Pru and Yum. Thursday, Twitter, Cerner, Nvidia, Yelp. So there's some big players coming out earnings this week, and as you know, I'm sure other people have said the same thing, but I pretty much wrote this without seeing it elsewhere. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Just a quick aside before I continue on. If you have TradeStation, then you can get for free off the web a indicator. Let me see if I can find it. Look for the TradeStation forum and look up the Guru, and it tells me the dates earnings are coming out either before or after the market and how many days. So I know a little bit of an ordering issue here. If I go down and down and down, I know that Momo, Eagle, Sucampo, Disney are all stocks that I have. These haven't printed yet. That are going to be having earnings come out this week, so I need to be prepared for those. I actually found something in TradeStation, in Thinkorswim, where, let me see if I can do this. I got a lot of scans. Way too many scans. Do the bullish scan here. And I was able to find, I'm not sure if I've got it in here, I think I had it in last week, actually an earnings notation that works in Thinkorswim. Let's see if we can find it. I guess it's not, here it is, next earnings. Now, I don't know if this came with something I bought, but I think it's one of the standards now. But I found this under fundamentals, next EPS date, so we've got the same thing now for those of you that are Thinkorswimmers. So back to the final slide here, market thoughts. We continue to climb a wall of worry. I think we're going higher. Trump tweets will continue to lead to individual stock impact. We continue to see a flurry of exec orders, increasingly divided U.S. population, and we saw what one of those orders did over the weekend, where Monday opened down big because of the immigration concerns. We continue to ignore uncertainty over Obamacare, and healthcare, as I said, seem to stabilize. And Trump is meeting with business leaders, which is, I think, a good thing as he pushes some of his regulations and tax and healthcare issues forward and spends less time talking about the woman's right to an abortion and who should be and shouldn't be coming into this country. I think that's good for the market. Broad-based rally this past week, really financials led, healthcare were strong, semis were strong. We still got this very low VIX. At some point we're going to say, see, I told you that low VIX was a problem. Problem is when. Now the neat thing is, for the next few weeks, we're going into a very seasonal strong time of the market. In fact, it doesn't look that way when you look at storages of gasoline and other things, but we're also going into a strong time of the year for energy. And so I did my bottoms-up review. I think this week it was 610 charts. And when I came to my top 20 or 30 picture of stocks, they were very heavy in banks, especially regional banks, semis, and biotech. All right. Tonight's agenda, you have my introductory comments. We're going to go look at the market and my favorite programs, do a little bit of analysis, maybe some bottoms up if I feel like the time, and then say goodbye. So I think most of you know that I like to go from here into TradeStation and do sort of my market review. So let's do that very quickly. What I like to do is go into indexes, make this daily, so all those errors will go away. Perfect. And I'm looking at the futures, and I'm looking for several things, probably 5 things. The first thing is the arrow. This is a PPS, person buy signal. It is also present on Thinkorswim. Red down is a sell. A green arrow is up is a buy. Second thing, I look at the color of the paint bar, and I know from Alexander Elder, if this is using his impulse indicator, a green paint bar tells me that the market is okay to go long or to hold. A red paint bar says I shouldn't go long, it's okay to short or to hold, and a blue paint bar doesn't give me a signal. The third thing I'm looking for is where am I sitting within the envelope, because I know from the past if I get much below, I come right back in. If I get much above the envelope, here's below, coming back in, I have a tendency to come back in as well. The fourth thing I'm going to look at is going to be these little red dots here. And the red dots on top of a price bar are another Elder indicator, and those are concern about potential MACD divergence or convergence of the green under. And the fifth thing is I'm going to look at the high jump bar. And those that paid attention last week where I called out the high jump bar and I think S&P and the NASDAQ and called out that they were very high, said we're going to get a pullback because we're too extended. So here is the E-minis, big up day on Friday, kind of even a high close doji if we're playing by by John's rules. Buy signal green, no dots, high jump 74, very bullish looking. I go to the weekly in a buy, monthly in a buy. The weekly shows me some, overbought condition, so that's a little bothersome, but I feel very good short term about the E-minis. Let's look at the YM. YM's green arrow, no dots, dots on the weekly. Weekly, all 3 time frames are a buy signal. Interestingly, the bongo was, the daily went red, but the weekly's green. That's the one that I look at as my buy-sell signal. That's good. High jump 64, feel good about the YM. Take a look at the NQ. Not as strong. It's a blue bar with red dots, but it's still got a person buy signal. Interesting, the weekly and the monthly are green, but the red dots are here as well, and we're at 91% on the high jump. So that means we have more extension than 91% of the last 200 days. So a little bit higher risk, perhaps, but still in a buy signal. And lastly, the Russell, which has been the weakest of late, had a big up move on Friday with a new green up signal, red dots on the daily and the weekly rather, all 3 time frames in a buy, 59% on the high jump. So I think all of them look good. The NQ may be the least good, but overall they all look very good. Let's look at the oil. Energy, it's really been going sideways for a number of weeks. I guess a little trend up going since over the last year, but for the last several weeks it's been sideways, but it's in a buy. Weekly sell. Monthly in a buy. Hold on one second. Okay, so just oil then in a buy signal, 67% the high jump, weekly sell, monthly buy. Oil, it's seasonally strong. Don't know how that's going to stay that way frankly, every week, the Baker Hughes rig count keeps going higher and higher. But, timing says it's seasonally strong. And boy, was there a lot of energy stocks on my buy list for this week. Dollar. Talk about how dollar's been weak. And it continues in a sell signal daily and weekly. Longer term for this year, it has been in a buy, but certainly the last couple of weeks have been weak. And look at some yellow metal, the gold, showing some bearish divergence here, which is concerning, but still in a buy signal daily and weekly, although on a monthly sell signal. Very quickly, I like to just look at my gestalt on the sectors. Healthcare, super strong, not overdone, buys throughout and green. Financials, big move up on Friday, super strong here. Let's look at the FAS and you could see buy signal on Friday, in a weekly buy, in a monthly buy. XLY, discretionary. They had a tough day on Friday. Amazon's a big part of them. So they look weaker, still in a buy signal on all three time frames, but with a red bar. Technology's been super strong. Another buy signal came in Friday, up at the top of its band. But stocks can run up the top of their band for weeks. Strong on all three time frames with lots of divergences, up over 90% on the high jump. Industrials, a green bar, but still in a daily sell. That'll probably change quickly. Staples, in a daily buy, weekly buy, monthly buy, with some divergence. Materials, we knew that they were strong at the end of the week, but they're still in a sell signal here. But on a buy, weekly, and monthly, I'll look for these to switch during the week. Now, one neat thing with, well, I won't go there. I don't have time. Utilities, also strong. And energy, as I said, is coming into a strong point at a new buy signal on the daily on Friday, but it's in a weekly sell. So clearly, healthcare, financials look great. Technology looks great. And all right. Now I like to jump into HGSI, go into the warehouse view, and the first thing I'm going to pull out is Woodward and Brown user groups, Major Markets Plus, top-down view, which is all price and volume heavily weighted to one day, and it shows me where the strength of the market was. And your portfolio was happy if you're long on Friday if the mid-cap, small caps, the Dow, the NYSE, and the NASDAQ were the top 5 performers. Russell 2000 was a little bit lower, but was still up 1.5% for the day. The weakness was in bonds, volatility, and the dollar. Now, interestingly, some of the big stocks, the S&P 500 and 100, and I'm betting there's an Amazon effect there, NASDAQ 100, were weaker on the day. So I look at the S&P 500. I look at some of my favorites. Again, show you some of the HGSI indicators that I use. So we're looking at daily charts. So up at the top, you have a couple of things I want to tell you about. The first two bars here, well, we have Hindenburgs, which I've hidden because there were no positive. The Hindenburgs were negative. So the last positive was sometime in December. So we have a weekly bongo and below it a daily bongo. The weekly bongo has been green and in a buy signal. And this is my primary buy-sell indicator since right after the election. And the daily bongo during periods of a pullback will go red, and it reverted to green as well on Friday. The third column down is accumulation distribution. Then I have a long and a short-term force. Unless you have volume, you don't have force, so that's blank. This is the high jump bar. When it's up at the top, I know it's extended above 95%, and typically it goes sideways or comes down, whatever the index is. This red line here is a red candle high. A green one here would be a green candle low. Both of those are sometimes considered reversal signals. The next bar here is for Bible gap ups, of which I don't have any right now. Yellow is squeeze. Here's a mobile breakout. Down here we have Eurekas and Phoenixes. These are calculated here on the NASDAQ or on the NYSE, and there are follow-through day that we look for. And you could see that right after the election day, we had a follow-through day and also a kahuna, which is a high momentum day, showing the strength in this market. And it was the same time, pretty much, 2 days later, my bongo switched, and it was go very, very long the market, which is what I did. The kahunas down here are exuberance or big momentum on an individual issue on a day, and blue is good, red's bad, green is good, red's bad. So this is my all-in view. I'll clean it up a little bit for the purpose of the next few looks. So here's the S&P, not quite at a closing high on the daily. It is at a new closing high on the weekly. You can see on Friday, we have everything's green on the bongos. We had a new kahuna come in. You can notice that the price is above the 8-day exponential in green, the 17-day simple, in blue, the 50-day simple, in red, the 200-day simple. And it looks to me like a pretty happy market that wants to go higher. If I look at the Dow Jones Industrial Average, which is here, pretty much the same thing, not quite a closing high, but getting close to it. Also had a kahuna on Friday. If I look at the NASDAQ, even with Amazon, the NASDAQ is approaching prior highs, and I believe it had a closing high. The NASDAQ had a closing high on Friday on the daily, and that means on the weekly as well. Bongos are both green, so even though it was a little weaker on my trade station view, it's still extremely strong. Remember, the trade station view, though, is the NASDAQ 100, which has the impact of Amazon and still looks pretty good here. And then lastly, the Russell 2000 had been the weakest. Notice how it pulled right back to the 50-day moving average and is ready to run again with a kahuna. If this was a stock, this is the stock that I'm buying. I go back to the spiders. I didn't get down to the 50, but let's take a look at the SPY. Same pattern, but pull back to the 17, breaking out with a kahuna. To me, these are very strong buy signals, and I think that this market goes higher. Just to finish up where we were at, we might as well look at the VIX, and the VIX continues to be extremely low. It's failed multiple times to get above the 50, still in a bongo weekly and daily red. The VIX and a red kahuna to the downside. The VIX is weak. This is kind of the all-time low, or as low as it's been in multiple years. We'll probably visit that in the first couple days of the week if there's not a fall. The dollar broke out of its range, can't get above the 8-day exponential to close, continues weak in a weekly bongo sell. A weak dollar should be good for gold, and gold has had a nice little run up. Looks like it might be stalling, but the bongo did go green. Now, the bongo went red back up here in the range of 127, 128. It went green at 116. So you would have avoided the entire drop, and you would have, you would be getting back in now, you would be in pretty decent shape. Now, I'm still not sure gold is out of the woods. A lot depends upon what the dollar does, how much fear comes out of Washington, but that bongo is interesting to me. Gold miners have been a little stronger, and so I think I've got gold miners in here. I'm sure I do. And you could see they're getting up close to their 200-day moving average, and they've been in a weekly bongo green for a couple of days now. Silver has actually looked much better on my weekend review. A lot of silver stocks, and they look a lot like the miners in a nice little uptrend here, and also went green on the weekly bongo. Once I've had a good look at the indexes, then I'm curious as to what are the sectors and industry groups that are leading. So I switched this to 07, which is the industry group, and I want to look at two-day force as an element of momentum. And I see I've got 79 groups moving to the upside. If I go to the downside, you'll see I have 3 or 4. I've got 4: steel, raw materials, base metals, airlines, and consumer electronics. So this is where there was weakness over the last couple of days. You can see here, interestingly, group ranks on the top 3 have been very strong. So I'm not sure if this is a 1 or 2 day wonder or a change in behavior in the marketplace. Let's look at what groups are to the upside. Again, as a top-down investor, and that's why I call this a top-down review, the first thing that I do is I look at the markets. Am I bullish? Am I very bullish? Am I bearish? Am I very bearish? Or am I neutral? I am bullish. Very bullish would be if we were just coming off of a clear-cut bottom, and I don't feel that way. So I'm bullish, but not exuberantly bullish. So I want to be facing the long. Then where do I want to play? A bottoms up would be to take a look at a lot of different stocks and find the best stocks. A top down would be find the best industries, and then the best industries look for the best stocks. So I typically start with the top 10. As I said, banks looked really good. The top group is diversified banks, and I have a holding in Bank of America. I'm not sure it's the best one. Now I'm going to add back the rest of my indicators here. So you could see the force shows up here. Here is the high jump, a mobile breakout. The red dots and the green dots are Wells Wilder's PSAR. This gray bar is industry strength, and you can see it turned up. So if I look at Bank of America, I see an uptrend, I see a pullback in a squeeze, and I see several different momentum indicators came in on Friday. A mobile breakout from a squeeze, a Morales and Catcher pocket pivot from a squeeze, and a HGSI kahuna from a squeeze. 3 momentum indicators. A stock moved up off the moving averages. It just has to get through that PSAR dot, and it's off to the races. I put a buy stop above that PSAR dot, and out of curiosity, I can see that that PSAR dot closed at 23.29. The PSAR dot is at 23.48, so I probably put it at 23.52 would be my buy stop, so I'd have to go up 23 cents. And then for a stop, you've got a 50-day moving average at 22.39. Man, you could put 23.52 to buy, 22.35 stop. So that's $1.16 on a 20. So that's about 7.5% on the stop. And it's a very natural stop. We haven't hit that 50-day moving average all the way back until October. And then you could trail it up. So I think that looks very viable. Good earnings per share growth. Dinky dividend 1.3%. JP Morgan, similar pattern. It did have a move off the 50. It was on the 50 on Thursday. Mobile breakout, kahuna pocket pivot. Also looks excellent. A little bit higher price stock. 2.2% dividend yield. Citigroup, it's lower in the pattern. Has to get above the 50-day moving average. It too had a kahuna. Notice that on JP Morgan and on Bank of America, the weekly bongo is green. Citigroup's got a little work to do, so I probably would look at the first 2. Wells Fargo, notice how it pulled to the 50. And then it had momentum, and it took off. That's what I look for. Wells Fargo already popped, pulled back, and went again. I like the first 2. So I found a couple things to like in diversified banks. Semiconductor devices, this group has been extremely strong. I've been playing Broadcom and Acalero and Qorvo, which I thought I got burned because it had horrible earnings and it bounced back immediately. AMD, I have a hard time buying them because they've been losers to Intel forever. They've got some new chips, but look at that lower left right-hand pattern. It was tight up until September. It's a little loose here. Notice the pullback to the 50. And then you had a kahuna momentum come in, a mobile breakout, and a Bible gap up, and there she goes. AMD looks pretty good, maybe too far gone. Cypress Semiconductor kind of loose, but the similar pattern off the 50, had a pocket pivot, kahuna, mobile breakout, and a Bible gap up. I don't normally go below the index. You could see Broadcom. You want to find the stocks. Here's the day. Any of these, this day would have been a good buy point, as would have this day. But I need to have other things occur. I want to see a kahuna. I want to see a pocket pivot. So I'm looking right here. I'm looking here. I had a mobile breakout from a squeeze. I had a PSAR reversal. I had a pocket pivot and a kahuna, and that would have been at 185. Had I bought then, the stock would be up 20 points in just a couple of days, and that's kind of where I bought because that's what I'm screening for. NVIDIA, this one has, let's look here, pull back to the 50, and then the next day, Bible gap up, mobile breakout from a squeeze, and a kahuna. Again, that is what I like to see. That's my favorite signal to go long and buy. And I'm not long in NVIDIA. I wish I was long in NVIDIA. Take a look at Acalero, and there's a lot to like in semis. This one has been a bit of a disappointment. It actually has had good earnings. I shouldn't be in it because the weekly bond goes red. It showed up on a screen, and it's just really going sideways. It's had its big move, and I'm up on it, and I keep waiting for it to run. You could argue that it's got a nice little Darvis box, and if I'm thinking back why and when I got in, I mean, the stock is living in this range, and you buy it when it hits the bottom about 8, and you get out of it at 10, and I'm in it off the bottom of that box. I've kept it too long. I probably should not be carrying that one anymore. And, you know, I did mention that on Corvo, let's see if it's here. I'll punch it up here. One of the problems with staying too long and not paying attention to earnings dates, and I was too focused last week on Netflix and Facebook, it came down hard on earnings and ended up closing up only down a bit and then up again the next day. It's almost made up its earnings miss. All right, so semiconductors, I think that there's some nice things there, although they're getting overdone. Oil and gas services, I remember I said energy is in a strong part of the year. Let's look at Weatherford. Tell me if you see anything, a pattern. Pull back to support, a couple of kahunas, mobile breakout squeeze, Bible gap up. These things run. Read Morales and Catcher's book about Bible gap ups. I'd rather have had the Bible gap up occur. Well, actually, above the 200, but it did get above 200. Bristow Group, pull back to the 50. Big move on Friday. Mobile breakout from a squeeze. Everything is green in a kahuna. It looks excellent. The big guy here is Halliburton. Let's see, Ensco. Here's a small guy, a driller, sitting on support, had a kahuna. And let's just take a look at Halliburton because I own that one as well. And you can see it's been green ever since it broke up above here when their Baker Hughes transaction, I think, stopped. Nice uptrend. Not too exciting right there. All right, I got to go do something with my dog. I'll be right back. Those who've been to my live meetings know how much I love my dog, but unfortunately, he makes the same sound when he wants to go to the bathroom as when he wants a treat, crying, so you never know which is coming. Number 4, exploration production. ConocoPhillips. Let's look at that pattern. Do you see a theme here? Move up, pull back to support, mobile breakout, and a kahuna off the 50. Love that pattern. Look at the earnings per share growth. Pays a 2% dividend. Marathon a little bit below the 50, but trying to have the same pattern. APC, same pattern. Nice uptrend, sideways, sitting on support, kahuna. There were so many energy stocks who gave me the pattern like this. It makes it hard for me to believe this market's going down, especially in energy. Great earnings coming in. Even some of these, Devon, same pattern. Apache, not as nice. Apache's all the way down on the 200-day moving average. But this one I wouldn't be touching right now. The Bongo Weekly's red, but it too had a big move off of support this week. So a lot of the exploration and production stocks look good. Banks, if big banks look good, I think little banks may look even better. I think they're bigger benefactors for some of the regulatory changes and the interest rates coming up. These, a couple weeks ago, I said banks were going to go because they pulled back to the 50. They've gone, and they're continuing to move. This is U.S. Bancorp. KeyCorp sitting on the 50, had a kahuna come in on Friday. Huntington Bank, same pattern. Zions Bank. I mean, this is my pattern. I mean, those who've been to my meetings know this is what I trade all day long, every day, and how I make money. Pullbacks in an uptrend to support with momentum. This is the quintessential stock. I know that I don't want to take the trade until it takes out the PSAR dot. I know I put my stop probably below the lowest bar in the last 4, which happens to be right below the 50-day moving average. And I set my little trading system up to take the buy if it crosses above that. How simple is trading? This is a simple trade. And if you don't want to do this individuals, you have KRE, which, oh, by the way, big surprise, looks exactly the same. So regional banks look really good, tasty, and lots of them out there. Consumer finance, also within the finance world, Visa had some great numbers. And I'm going to want to close this down sooner than later tonight, so I'm not going to be doing this much longer. So Visa, Bible gap up on Friday after earnings. MasterCard, some nice energy coming in off the 50, a pocket pivot and a kahuna. LA Financial, well, we missed it. This was at play. Off the 50, mobile breakout, squeeze, Bible gap up, pocket pivot, and kahuna. Now, you might ask yourself, but Jeff, how do I find these during the day? Simple. In my trade station, I have an indicator that will be moving all day long, and it will pick up things like pocket pivots, mobile breakouts. I'm going to pick up kahunas too. And I put a list of stocks that are setting up, and I look for them to trigger. In Thinkorswim, I've got the same thing where I could put and keep track of kahunas, pocket pivots, Bible gap ups, HCDs, LCDs, number of different things. And so again, I put the stocks that I want to watch. And the other thing I might do is I might go into either into Thinkorswim, TradeStation, or maybe even TC2000 and put an alert to give me an alert if my stock is taking out a certain number. And that drives me to make the trades. So let's see what else is left here. You notice biotech is sitting here. Steel producers had some big moves this week. I'm getting late, so I don't want to go through all those, but I think you see what I do, which is right-click and go down and see which are the leaders. Now, I have a couple of favorite scans. Let me just show you smart groups, one of the things that's built into Hgsi and why it's really worth every penny. A view is sort of how you like to look at things laid out. And I'll just put the scoreboard combo, no filter. And I have a lot of different things, technicals and fundies that will show here. I go into the smart groups and I look under my name. I see pull back to the 50-day moving average with a kahuna. Hey, that's my stocks. This is something that everybody have in their program. It comes every day updated. These are stocks that meet that pattern. So if I start looking at these stocks, I might find some stocks that are attractive. 50, kahuna, don't like it, it's below the 200. I mean, the bongo was red. This looks interesting, Louisiana Pacific. It's really sideways, no energy, but kahuna in a pocket pivot. I want here we go. Uptrend sideways to the 50, a kahuna mobile breakout from a squeeze, ready to run. Of course, it's a regional bank. Another, oh, God, I love this one. Right below the PSAR dot, ready to run. Hewlett-Packard Enterprises, Blackstone Mortgages. Every one of these stocks meets the pattern. They may not all be good looking stocks. This is a good looking stock. Some of them may be things that are below the 50, but that is a smart group that you could find. Another one of my favorites are to find stocks that are in a squeeze right below that PSAR dot, because I know that they're about to reverse to the upside. So there's a lot of overlap in these stocks. So if we look at Bank of America, I don't want to buy it after it's had a giant move. I want to buy it as it's starting its move. So when I have a stock whose red PSAR dot is just above closing price, I know that if the stock trades above that dot, it triggers a Wells Wilder buy signal. And that signal will be taken by people that follow him, and it might be a good time to get into that instrument. So I can scan for stocks, and if they're in a squeeze, I have a pretty good chance they've been going sideways and building up energy for a big move. And if I just look through some of these stocks, again, they're not all going to be perfect, but here's a number of stocks that are, setting up right below that PSAR dot that might be ready for a big move. Those are two of the smart groups. I've found that a lot of stocks will have volume coming in before their big move. So I may look at stocks that had big volume. Now, unfortunately, a lot of these have already moved, but it's a place that I might spy something that looks interesting. Within Woodward and Brown, they have something called Best of Woodward and Brown. Here's my Acolero, here's my Broadcom, and they picked the best of the best, and you could see how many semiconductor devices, showing you the strength in semiconductor devices. Then they have the best stocks under $15, and one that I like as well, and you could see a number of the regional banks made it in here, some biotechs and some miners. Interesting. There are a number of really good scans here, and these come free every day. In fact, if you update intraday, they get updated intraday. They're calculated. It's not that I give a list or Ian gives a list. And another one of my favorites is Dave Gilardi's Sprinters. And again, these will be stocks that are very strong technically and fundamentally. And one could see here how many bank stocks made it and semiconductors and banks. And so, as I said, I looked at about 600 plus stocks this weekend, and I always come up with a buy watch list. And this list is the one that I'm going to scan when the market opens and set buy limits as well as alerts based upon behavior in the market. And here's my buy watch list. I'll put it up for a second, maybe call out a couple of the ones I like. So, first thing is, when you see ETFs like Spiders and XLF, IWN, and FAS, I'd rather buy stocks, but when those are here, it tells you that there's a lot of reason to like these. Let's take a look, for example, at the XLF. Tell me if you've seen this pattern before. Uptrend, sideways, breakout, mobile breakout from a squeeze, pocket pivot, and kahuna. XLF is going higher. I could see, and I already showed you the IWM, the same story. Uptrend, sideways, in a squeeze, mobile breakout, kahuna, weekly bongo is green. Twillo I wouldn't play with because it's got earnings this week, but I really like the pattern because doesn't it look like it's done going down? And oh, look at this. It had multiple pocket pivots and a kuna sitting on the 50-day moving average. The problem with Twillo is it's beaten down. It's a beaten down IPO. It's kind of as low as it's getting. I think it's done going down. I'd be happier if the weekly bongo was green. I wouldn't necessarily be buying this with earnings coming this week, but it's on my watch list. Notice some banks, some E&P companies. We looked at several of those. Several of the midstream oil and gas has made it as well. So let's just look at those very quickly. ETE, it's not really sexy from a pattern, although it does have a kahuna and a pocket pivot and a mobile breakout from a squeeze and took out its PSAR. Huh. But it's more sexy to me with a 6% return. EN Link, 8.1%. One OK, 5.8%. Plains Group, 6.4%. Spectra, 3.8%. These things pay in this a huge dividend, and I think they have both growth and dividend opportunity. So, on that note, let me just show you one other thing. In TradeStation, I look at, there's a number of scans, and my favorite scan is probably, used to be buy 2, which would be a buy signal, daily buy, when weekly's already in the buy. So let's just look at one of these. I like BZUN. I'm able to combine John Person's indicators, my bongos here, got indicators for this for TradeStation, my version of a multi-time frame of John's indicator. It's my version. It's never authorized. I don't supply it to anybody, but trying to see if I can get 3 time frames on one. He's got one now, which is a buy signal number 5, which looks at not only a buy signal on the daily, buy signal on the weekly, but helps us to find stocks whose volume is going up, convergence on volume and momentum along with those buy signals. And I even get down here where I can start to take a, how about a stock that has a mobile breakout in a squeeze, and had a PPS buy signal. So combining some of my favorites. So Sabre. So here are my dots. So I know that the yellow is a squeeze. Right above that is a mobile breakout. This tells me the PSAR just flipped, and this tells me it had a kahuna. I see a new PPS buy signal on the daily. I see the volume indicators are strong. And I bet you if I go back to my list, let's see. Let's just see. I bet we're going to find Sabre on my list, or Sabra. And so I'm able to scan looking for the best of the best. And here's one big uptrend, little pullback to the 17, mobile breakout from a squeeze, about to reverse the PSAR in this program, and it has a couple of kahunas. So I do a lot of scanning. So lastly, I always get questions, how do I get these indicators? I'm not a business. I'm just a guy who likes to talk and loves to do webinars without selling anything, which most people don't do. So since I learned from these folks, I'm going to show you where I get them. Personsplanet.com is John Person's site, and you can read all about the indicators. That's John. And you can hear about his indicators. I started a group of users called the Pug Group, and John has a special package. I get nothing. By the way, I don't take a commission. I don't ask for anything. I help the people whose stuff I work with so they stay in business and support me by improving their programs. Some people ask where I get the Elder Impulse Indicator, www.elder.com. And under Browse and look for software, and they have a disk for Thinkorswim. They've got TradeStation, various disks for TradeStation. I think this is the one that's the combination, Metastock, TC2000, and others. And then let's see, what else do I use a lot of? And if you don't know about Morales and Catcher, GilmoReport.com, I believe is his site. And you can learn all about them. He has some comments about the market. Smart dude. And this guy here, his partner Chris Catcher, is probably the smartest guy I've ever met. A true rocket scientist, and I'm not kidding. So, and then lastly, as I already told you, the site for HGSI. All I ever ask of you is one thing. As I said, go to Investing Strategies, logged in. You'll see my blog, and you'll see probably hundreds of these videos. All I ask is if you ever buy these things and they ask who referred you, just tell them you heard about it from the HGSI doc, Jeffrey Scott. And like I said, I don't get commissions. I hope you make money trading. I hope you don't waste money on programs you don't use. And I hope that just from watching my videos, you get something out of it. Have a great week, and thanks for coming by. And we'll say goodbye. And that's my favorite. And he's the guy that's been bothering me tonight, but I love him. Bye, everybody.